How's it going, everybody? It's Earl, the money coach, and we want to start off this series by going through what we call a financial GPS. Now, what is financial GPS? GPS stands for grow, protect, and save. How are you going to grow, protect, and save your money correctly? That way you could save for yourself and your financial future. Just like a regular GPS, you have to put the coordinates in because what is it going to do? It's going to get you to where you need to be as quickly as possible and without wasting time. Same thing applies for your money. That financial GPS is going to show you how to get to where you want to be when you retire. Because remember this, retirement is not an age, retirement is a number. You need to figure out how are you going to get to your number, your financial independence number. We call it the FIN number. And that's going to figure out and show you how are you going to be able to retire with enough money when you want. Now, how do we do that? We have 6 steps to financial independence. Step number 1 is going through your cash flow. Step number 2 is having an emergency fund. Step number 3 is taking care of your debt. Step number 4 is giving yourself proper protection. And then the favorite 2, step number 5, building wealth. And step number 6, preserving wealth. These 6 steps of what we call financial independence is going to do what? It's going to be able to provide you that GPS. So let's dive deep. All right, step number 1, your cash flow. You have to know what's going in, you have to know what's going out. You have to have yourself a budget. Okay, if you don't have a budget, how much money do you think you're wasting? How are you supposed to save if you don't know where the money's going? That's huge. Have a client, an awesome family of 5 that spent $380 on groceries, $2,600 eating out because they have some teenagers. Chick-fil-A, Chipotle, Starbucks, we all do that. But look, it went out their budget. How are you budgeting to figure out if you want to make more money or save more money? Because a lot of you guys that are out there, you have the money to save, but you may be blowing it on some stuff. A few websites we have Rocket Money. Rocket Money lets you track some of your expenses when you plug everything in, find those old subscriptions. You have old school, print everything out, make yourself a statement, take 2 highlighters, okay, one to highlight your basic needs and one to highlight your extras. And you're going to see how much extras that you have out there. All right. So you have to figure out where your cash flow is going before your cash flow starts growing. Okay. Now, step number 2 is having an emergency funds, 3 to 6 months. You hear it all the time. You need to have 3 to 6 months your personal expenses set aside. So, God forbid anything happens. Guess what? Now you actually have something to fall back on. And when we say emergency funds, we mean emergencies, guys. We're not talking you have a flat tire, you have a spare tire, you can fix that. An emergency fund is you live, say, in Florida and you have to fly to California to help a family member out. Someone's sick, your transmission blows on your truck, and that costs a few grand. That's your emergency funds. Now, a quick solution is I always recommend to go 95/5. Now, what's 95/5? That means 95% of your regular income goes into your main account and 5% goes into your emergency funds, preferably a credit union, because credit unions give you a little bit more of a higher saving. Okay. If you have a job and your job has a option where you could split your direct deposit, you could have your direct deposit go 95/5. That's super huge. Then the third step is your debt consolidation, figuring out your debt, from your credit cards all the way to your student loans. There are strategies. You have consolidation for your credit cards, you have loan forgiveness for your student loans. And I say these things because you have to understand how these fair crediting reporting acts out there are actually in play that could actually help you. All the strategies are out there. But here's the thing, they're not telling you about it. You think the IRS is going to tell you, hey, if you use this form, we could cut your taxes down to half. Hey, if you use X, Y, and Z, these internal revenue codes, we could deduct some stuff off your taxes. They're not telling you how to do that. So what do you think happens for your student loans? The Department of Justice is not going to actually show you, hey, let's make sure that we can take care of everything in certain ways you might not understand, but we have the code out there for you. They're not telling you that actual school system. So it's super important. But the main thing is to educate yourself. You have to educate yourself for the simple fact I can help you get out of credit card debt. But if you're not educated, what's going to happen? You're going to fall right back into the same spot. Now, step number 4 is proper protection, properly protecting yourself, your family, your assets. Through insurances is the main way. You got insurance for your car, you have insurance for your home, you have insurance for your cell phones, but one of the biggest assets you have is yourself. And actually, if you can't provide for yourself, how are you going to take care of your home? How are you going to pay the mortgage? How are you going to pay the car note? So many people say their biggest assets, their house or their cars, but it's actually you. Because if you can't work, what's going to happen? How's everything taken care of? So you got to protect yourself because wealthy individuals know if I'm healthy, I need to have income coming in. But if I'm also sick, I have to have income coming in as well. Now, step number 5 is what? It's the favorite one. It's building wealth. And the main thing is there's so many different ways. Some people say stuff is right. Some people say things are wrong. There's pros and cons. Everyone's different. But the key goal is how are you going to consistently outpace inflation? Keyword consistently outpace inflation. We've had an anomaly these last few years. Normally, inflation's at 2 to 3%. So if it's at 2, 3% on generally speaking, and you're getting less than 1%, how do you make up that difference? Right now, we're talking 6, 7, 8%. So what kind of accounts are going to outpace inflation? That's what we want to show people. And then ultimately, step number 6 is how do you preserve wealth? You know, many people don't know from your wills, your trust, your estate planning. You want to leave a legacy, but you end up leaving a liability. And that's for so many people out there. You have to understand how to make sure you could pass these things on correctly. Because look at all this. You have Aretha Franklin's, you have your Prince, you have Chadwick Boseman, you have DMX. All these people, guess what? They didn't have a will, a trust, or estates and everything taken care of. And guess who came first before their family? Their favorite family member, Uncle Sam. You don't want that. So is one step more than the other out of these 6 steps of going through your cash flow, your emergency funds, your debt, your proper protection, your building wealth and preserving wealth? Those 6 steps, one is not more important than the other. You need all 6 steps to get to where you want to be. That's the financial independence, your financial GPS, which is super important. Definitely, you can reach out, contact. I'll leave information in the bio. That way, you could do what? Reach back out and have a free consultation. But understand is you have to know how to get to where you need to be. And that's where the financial GPS comes in with our 6 steps to financial independence. We're going to dive deeper in on these next few weeks on this channel, but make sure that you have all 6 things working for you. And I'll see you at the top.